So what we are seeing now is the chart of Philippine Stock Exchange Index as of March 19, 2020 at dito kitang-kita natin kung gaano kalaki ang ibinaba ng ating Philippine stock market. In fact, ang year-to-date return ng ating index as of March 19, 2020 is negative 40.84%. At kung hindi mo ma-appreciate yan, so let's check this next slide. So the black curve, ito yung ating Philippine Stock Exchange Index. And we have this another chart for Jollibee, one huge household brand that we know of. At ang year-to-date return na Jollibee is negative 57.82%. So imagine no, more than half ang nawala kay Jollibee. And it's not just Jollibee. If we look at even big holding companies, so we have Ayala Corporation down by negative 49.84%. We have SM down by negative 36.05%. So imagine yourself, you start the year 2020 with full of hope, full of positivity. Diba? You have told yourself you will be in better charge of your finances. You're very excited. Then narinig mo sa katabi mo about stock market. You decided to put your money into it. And yet, in less than 3 months' time, nangalahati yung pera mo. So in this video, I'm gonna share 3 critical lessons that you can apply in a bear market. So para hindi ka naman ma-depress each time we encounter a bear market. And yes, officially we're now in a bear market. And the thing is, this is not really something new. In fact, if we go look back at our history, so this is a chart from CUL Financial based on available data from year 1987 to March 13, 2020, we can see that we have encountered a lot of bear and bull markets. So yung bear market dyan is yung mga red bars. Yan yung may mga decline ng at least 20% from the previous peak. So that's our definition of bear market. And the length of the bear market, ito, is the length or the number of days from the peak of the previous bull market to the bottom, provided of course na yung market has declined by at least 20%. And the periods between the bear markets are considered as bull markets. So yun yung mga blue bars. And here we can see that in a span of 33 years, we actually saw 9 bear markets and 9 bull markets. So bear market is really not something new, but that is part of the natural market cycle. Kaya may advice actually sa atin si Warren Buffett. Ang sabi niya, unless you can watch your stock holding decline by 50%, without becoming panic-stricken, you should not be in the stock market. So in other words, Warren Buffett is saying to us, we need to be first aware that these things are actually possible. Now imagine your money losing half of its value. That is actually possible, as what we have seen now. And second, it's not enough to be aware, but we need to be prepared. And how do we do that preparation? Well, I'm gonna share in these lessons. And if hindi ka pa naman nag-start mag-invest, so you can go to this link, smartpinoyinvestor.com/go. So makikita mo dyan yung mga steps how to start investing. And if you want to get updated on more lessons like this, so you can subscribe to my channel and click the notification bell so that aware ka for every new free video lessons that I'll share with you. So now going back, what are the 3 lessons that we can learn as an investor from this bear market? So lesson number 1, invest money you won't need soon. So bakit mo ito kailangang gawin? Well, because as we have seen, stock market is really not sustainable. So there are times that stock market can give you profits, but there are also times when it will not be as profitable. Or worse, pwede ka pang malugi. And we have seen that very clearly in this previous chart. So imagine, nag-invest ka start of the year, tas may kasal ka pala in 3 months' time, and then you have encountered this negative 50 or 30% drop. So, anong gagawin mo? Diba? Malaking sakit sa ulo. Kaya it's not advisable that we put money we will need soon in the stock market. And another principle related to this is you should only invest for your long-term goals. So, it's true na walang guarantee sa stock market, but it's very profitable if you have long time horizon. So invest only for your long-term goals. And I would say a minimum of 5 or 7, kung kaya mo ng 10 years. So ilalagay mo lang, iipunin mo lang yung money mo sa stock market and you will consider it as parang, your giant piggy bank. So if that is your time horizon, then stock market can be a good option for you. Of course, there's also an option to trade. But if you want to trade, then you will also need to train. So you will need to have proper training. You will need to be aware of the strict rules of the game. You will need to monitor daily. You will need to cut loss. In other words, you will need to be laser focused on it. But for those who simply want to prepare for your future, to prepare for your long-term goals, then just follow our first lesson and you will be good. So again, lesson number one is invest money you won't need soon. And if you obey this rule, hindi ka kakabahan pag nangyari yung mga bagay na ito. Hindi mo ipo-pull out yung money mo. In fact, mas matutuwa ka pa nga kasi ika nga, nakasale yung mga stocks of these giant, huge companies. And these times present an opportunity for us to accumulate them at cheaper prices. And you will be much more profitable when this market starts recovering. So that's our first lesson. And on to our second lesson, invest only a part of your savings. So mahalaga ito kasi you don't want your time to be focused on your investments. Kapag ang buong savings mo kasi yung nasa stock market, that means you're very exposed into it. So malaki yung temptation that you become dependent and daily monitoring it. You would still want na meron kang capital and other resources outside the stock market para whatever happens sa stock market, you can still live a comfortable life. Again, don't invest everything you have. The key to remember is you don't want your investment to control you. Instead, you want to be in full control of your investment. And just a simple tip, so there's this 6-jar money management system coming from the book Secrets of the Millionaire Mind na pwedeng yung i-apply sa buhay nyo. So what are these 6 jars? So very briefly, we have the first jar, which is yung 50% of your income goes to your necessities. So parang budgeting na ito, no? Necessities covers your food, your bills, your clothes, probably your internet also. So you should have this to live a comfortable life. Otherwise, para ka kasing walang dignidad mabuhay, parang ganun. So allot 50% of your income to your necessities. The second jar is yung financial freedom. So ito na ngayon yung ilalagay mo to your investment. Then another jar, 10% of your income goes to your long-term savings. Dahil hindi lang naman good retirement ang gusto mo. You also have other dreams like vacation or car or a huge TV or a good house. Diba? You can put this in time deposits or high-interest savings accounts. And then we have the fourth jar, education. So this is what you use to learn more. While you are building your wealth, you should be continuously learning. So you use this to buy books, you attend seminars, you go to coaching, you meet people who can teach you. In effect, you can consider this as actually investing on yourself. And then the fifth jar, which is the play jar, so this is advisable for you to also reward yourself. So ayaw mo naman kasi na nagpe-prepare ka for the future, pero malungkot ka in the present because hindi ka nakakapag-enjoy. So total, you have something more than enough. So why not reward yourself while you are building your wealth? So this way, mas may enjoy mo kasi yung journey. And lastly, the sixth jar is 10% for giving. So if you want to help people and causes that you want to support, so you can use this allotment. So that's for lesson 2. Invest only a part of your savings. And finally, lesson 3. Yan, diversify your investments. And we will dig deeper into this lesson in this video. So in our previous video, I actually showed you how to find the best performing mutual fund in the Philippines. And I shared how you can actually find it and do it yourself dahil available naman yung data sa internet. And again, just to give you a brief overview how mutual fund works, you can think of a mutual fund as a basket of investments. So meaning you're not buying a single stock, but you are buying a basket of assets and investments. And when you do this kind of investing, meron itong two main advantages. Number one is the professional fund management service. So wala ka nang gagawin, bibili ka na lang ng mutual fund and you let the professional fund manager manage it for you. So hindi ka na mag-iisip kung ano bibilhin. Hindi mo na kailangan mag-isip kung kailan ka bibili at kung kailan ka magbebenta. So that is the job of the fund manager. Second benefit is the diversification. And how does this benefit you? So compare natin sa stock market. So let's say ikaw you're a direct investor, so you have very limited funds. So very limited lang din yung mabibili mo. Let's say a certain number of shares of Jollibee. But when it comes to mutual funds, so that it's a pooled fund, so mas marami kayong resources. So hindi lang stocks yung mabibili mo, hindi lang Jollibee, you can even buy several other stocks and even yung tinatawag na bonds or yung mga fixed income instruments. So anong benefit ngayon nito? Let's see. Pag stock market kasi and then down yung Jollibee mo, so down na rin yung entire portfolio mo. Luging-lugi ka na. Whereas in the mutual fund, if malugi man yung isang component mo, let's say nalugi si Jollibee, it could be na yung other components of your holdings, like other stocks that you have in the mutual fund and even yung bonds, ay nagpe-perform ng okay. So in effect, na-offset yung impact nung Jollibee. And overall, it could be na positive pa rin yung performance ng mutual fund and na-manage mo yung risks. So in effect, when we talk about diversification, we're actually dealing with something called risk. Because we believe na each asset has a risk. And therefore, when we do diversification, we are actually doing a risk management strategy. And how do we do it? Well, we mix a variety of investments and therefore we limit our exposure to a single asset and we limit our exposure to a single risk. And there are different levels of diversification that we can make. First level is the company level. So you don't invest in one company. So hindi lang PLDT for example, you go outside PLDT for example, you buy Globe. Pero anong problem nito? Pag may dumating for example na telco player or mayroon halimbawang pinasang batas na masama sa telco industry, walang kwenta yung diversification mo because both PLDT and Globe are affected. Kaya mayroong another level of diversification. Second is industry. So now you're not just investing in PLDT and Globe, mag-a-add ka na rin ng other companies coming from different industries. The problem is, what if may mangyaring political crisis or may national emergency that can have an effect that will span across industries and it will impact all if not most stocks. So now we do a diversification one level higher, which is on geography. So you'll not just be investing in domestic companies but also on foreign markets. Now, lastly, what will happen if halimbawa mayroong global pandemic like coronavirus? Then we have seen that even global markets are down, then you now need to invest in other asset classes. So, hindi na enough yung stocks lang, hindi na enough yung stock market lang. So, you'll now invest in other asset classes like bonds and money market, cash and cash equivalent, real estate, commodities, and etc. So, again, the idea is not to be affected by a risk, but to control the impact of the risk. And we have to remember this key idea in diversification. And what is that? That the assets that is comprising your investment should respond differently, often in opposing ways, to market events and other influences. So, dapat magkaiba yung magiging behavior ng assets na ito, asset class, to the same market event and other influences. So, a traditional example that is commonly given is stocks and bonds. So, this is the performance, for example, ng ating stock exchange index. Now, this is the performance of bonds. And here we can see that from year 2012 to 2018, stocks is actually going up, but bonds is pretty stagnant. So, hindi siya gumagalaw masyado. But 2019 onwards, we can see that stocks is actually going down while bonds start inching up. So we can see that in this figure. So in year 2017, for example, malaki yung performance ng stock market mo and yung bonds mo is very stagnant lang. But come 2018, so malaki naman yung ibinaba ng stock market and yung bonds mo naman is almost stagnant lang din. Then year 2019, so hindi masyadong umakyat yung stock market, but your bonds has performed much better. And here we can see year 2020, so sobrang laki ng binaba ng index, whereas yung sa bonds is hindi ganun kalaki yung binaba. Makikita natin dito that stocks and bonds are responding differently to the same market events. So yun yung sinasabi natin dito sa principle na ito. And in fact, just last year, when stock market was struggling with all the political factors affecting its performance, bond funds were able to post double-digit returns in a tough 2019, whereas yung stock index mo and stock funds, so mas mababa. So here we can see na magkaiba yung behavior ng stocks and funds most of the times. Mahalaga na we observe these kinds and levels of diversification, and you can look at this figure no and assess how you can diversify in your existing investment. And the challenge really for us small and retail investors is this. So it can be very difficult with time and budget constraints to actually create a diversified portfolio. If tayo lang yung gagawa nito as a small retail investor, we will need to be monitoring a lot of places and investments. And that can be very difficult for us. And the good thing is we have these mutual funds available that we just have to choose so we can allocate and invest in different asset classes. And remember, we're just talking about investments here. I guess this is also a good practice for us to do diversification when it comes to our personal income. So we are doing investing para meron tayong additional na income. But remember, we can also have additional income from other income streams. Like if you are an employee, you can keep your employment. You can also start thinking about building a side business. Or you can also probably start a rental business para meron kang rental income. Probably you can also consider making online business. You can do buy and selling online and other income streams that you can create. So spend this time and resources to diversify hindi lang doon sa investment mo but also on your income streams. So yun, those are very quick lessons that I can share with you as we go through a bear market. So these are very simple yet practical lessons that we can start thinking on. And as a recap, so these are some of the lessons. Number one, invest money you won't need. 5 to 7 years na hindi mo gagamitin yung pera or even longer mas okay. Second, invest a part of your savings. So not the entire savings that you have, but just a part of your savings para whatever happens to stock market, you can still live your normal life. Lesson number 3, now that you are into investing, invest in many asset classes. So start the concept of diversification, lalo na pag nag-start ka pa lang. And once naging expert ka na, mas naging experience ka na when it comes to investing, then probably you can lessen the extent of your diversification. And lastly, this is a good time not just to diversify in your investment, but also diversify in your income streams. So think how you can create multiple income streams. And if you are interested also to watch our other previous video, you can watch this best performing mutual fund in the Philippines, how you can find this mutual fund. So it's available in my video. And if you find this video helpful, so I encourage you to subscribe to my channel and click that notification bell. Like this video, share your comments below so that we can reach more Filipinos and teach them how they can create their own financial freedom. So thank you guys for watching and see you in our next video. God bless you. Bye-bye!